There are several different DeFi strategies in the crypto market where you can earn up to 50, 60, maybe even 500% APR. But what is the risk that you're actually taking on? Well, depending on the different pools or the different protocols you go with, there are several different types of risk. But what if I told you there was a way to have a delta neutral position and get paid to do it? So it would outpace something like a stablecoin yield. Now, as we've all seen with the USDC DPEG, stablecoins, they're not always stable. In fact, with stablecoins, you have no upside, but all the risk to the downside. What do I mean by this? Well, you buy a stablecoin at $1, you don't expect it to go to $2, $3, so you have no upside. However, if it goes to zero, well, you lose everything. So in today's video, I want to show you how you can use different crypto options platforms in order to get a delta neutral position and get paid to do it by taking advantage of different arbitrage opportunities between the costs for the options on different platforms. I'll also show you how you can do some copy trading with some different wallets, especially if you don't know where to get started with options. Let's go ahead and show you guys what's up. So if you don't know how to use Lyra Finance, I'll give a brief overview today, but you can check out some of the full videos that I've done on Lyra Finance so you can understand the tokenomics, how the protocol works, as well as some information on how options work. If you're unfamiliar how options work, an option gives you the right but not the obligation to buy a particular asset. So let's say, for example, I see Ethereum. Ethereum is trading at 1721, and I'm like, I think it's going to be bullish. So what I would want to do is I'd want to buy a call option, or I'd simply just buy ETH if I wanted to and sell a covered call. But let's just entertain buying the call option. I would say, all right, ETH is trading at 1717. I'm pretty bullish. I think it's going to keep going up. So I can either choose to buy at 1700 or 1750. Either of them are fine. My goal is to look for one that's close to being in the money at the time of buying the trade because I'm expecting it to go up. The closer you are in the money, the cheaper the option is. So if I'm buying something at 1600, like buying the call option at 1600 when ETH is trading at 1713, it's going to be more expensive because a call option gives me the right to buy that particular asset at that particular price. So if I buy a call option for 1600, that means I can buy ETH at 1600. Hence why I pay 126. Because I mean, if I buy it at 1600, that means, I get it at 16 and theoretically sell it at 17 and profit the spread. Then the opposite is true. If I'm bearish and I'm like, I want to go ahead and lock in profits, I would buy a put option. Buying a put option basically says, hey, look, I have the right but not the obligation to sell ETH at a particular price. So if I buy a put option at $1,700, that means I basically can sell ETH at $1,700, regardless of what the trading price is. And they even give these expected profit and loss and you even have an expected profit and loss chart so you can play around and see what the point of profitability would be. So if it's right here and okay, look, ETH is trading at 1650, I would be in the green by $6.72. The reason why it's 1650 and not 1700 is because I have the cost of the option, which you can see here, $42. Well, actually, it's $43. And if you have some Lyra tokens staked, you actually get reduced trading fees. So that's also something to keep in mind. And as you can see here, this is the trading rebate. So say, for example, I was staking 1,000 Lyra, I would get a 20% rebate. If I was staking 100,000 Lyra, then I would get a 47.5% rebate. So if my fees were $10, now my fees would only be, if I was staking that many. All right, so that's just a brief intro on options so you can kind of understand it a little better and have a bit of a backstory on how this strategy would work. So to execute this arbitrage strategy, we're going to be using Lyra Finance and Deerbit. First, I would start by selecting similar dates. So let's just call it expires March 17th at 4 a.m. Let's do this expiration of March 17th. We're going to sell a call option. So currently ETH is trading at 1716. So, I mean, just to get the best premium, we can just call it 1700 if I think ETH is going to come down a little bit and be in the money. Regardless, it doesn't really matter because I'm going to be hedging my position on another exchange. So basically, if I take this option, I'm basically going to be getting $47. So if I open up this option and put up the collateral, I'm going to get $47. I can choose how much collateral I want. I can do a lot. I can do a little bit. The more I do, the higher my liquidation point. So if I put up $4,000 in collateral, my liquidation point is going to be at 5,500 ETH. Is that likely to happen in 3 days? Probably not, but hey, you can't put it out of doubt. So let's just say we'll do at 2,500 ETH. So basically our collateral, we'll actually just call it $1,000 in collateral. So we're going to do $1,000 in collateral. And so let's call it $2,500 liquidation price. And if you don't want to even mess with liquidation points, just put up 1 ETH. And that's just 1 to 1. It doesn't even matter at that point. Because ETH goes up, whatever you deposit into that vault. If it goes down, I mean, whatever. It's an ETH. Or you can choose to do less collateral in ETH, but either way, your liquidation point is something you need to take care of. So effectively with this position, if I'm selling a call option at $1,700, I want this to expire worthless. Like, that's preferably. And I'm getting paid $39 to do this. In order for this to expire worthless, ETH would have to go down in price, let's say 1,650, 1,600, whatever. Nobody's going to want to have a call option at 1,700 if ETH is trading below that. And if my collateral is in ETH, I also have exposure to the downside, so that's something to understand as well. So I don't want it to be extremely volatile, but I also don't want it to go too high to where the premium that I was paid isn't enough to compensate for the impermanent loss I've received as ETH went up in price. So selling the call option, Lyra Finance, I get $39.70. Let's go over to Dearbit. I have the call option on Lyra Finance at $1,700 with an expiration of March 17th. So we're going to select some dates between March 17th and now we need to go ahead and buy a call option because over here we're selling the call option. So to hedge our position, we're now going to need to buy a call option. So if we choose the one that's going to give us a call option, the right to buy ETH at 1,700, you can see here it's trading at $43. So we can see here that we receive $39 on Lyra Finance and we pay $44 on Dearbit. We're going to be losing, well, actually it's $42. So we're going to be losing about $3. It's not really worth it. And this changes as volatility in ETH goes. And as you can see, this price is constantly changing. So we want to look for something where it will be more profitable. Well, as you can see here, it's now in the profit as volatility in ETH is doing its thing. At 1,700, I would get paid $41.58. And over here, I would have to pay $42. So let's take a look at some other numbers. Let's take a look at 1,750, for example. We'll get paid $22.43. So if we look at 1,750 here, we're only going to be paying $21. So as you can see, we received $22 and we're going to pay $21, $20, whatever. You can put a limit order in when you're buying these as well, so you can make sure it's at least profitable. Something to keep in mind when playing this arbitrage strategy is that when ETH is extremely volatile or the asset prices are going to be extremely volatile, these prices are going to be volatile because they're constantly changing. So if you look for ones that are way in the money or way out of the money, then you can get different prices. So let's take, for example, 1,550. It's going to be $14.49 to buy that. If we do 1,550 right here, we would get paid $151.15. What we do have to keep in mind though is if we're putting up ETH as collateral, well then there is that chance that the option is executed and we have that impermanent loss from ETH. So here's an example of what it would look like crunching the numbers and going through the covered call arbitrage strategy. Let's say, for example, the Bitcoin price is trading at 19,500 and it expires above the strike price. So my strike price was 19,000 and Bitcoin, of course, is trading at 19,500. I have the $500 loss from the amount that I lost from the Bitcoin impermanent loss. Because remember, I'm selling it at 1900 and it ends up trading at 19.5. It's the impermanent loss that's received. And then of course I got paid a premium to open this position. And for this example, the cost of the premium was $144.16. Now to hedge this position, because I don't know, Bitcoin's going to go up, it's going to go down, it's going to be Bitcoin. So I go ahead and buy a call option on Deerbit because right here I'm selling a call option because this is a covered call. I'm selling the call option here. So to hedge, I need to go ahead and buy the call option. So I'm getting paid for this and I'm paying for the call option. So I'm going to pay for the call option at 19,000. So this basically gives me the right to buy it at 19,000. But of course, Bitcoin trades at 19,500. So my option expires in the green. It's in the money. So it's like, great, I profit $500. The cost of this option was $97 because I had to pay for that ability to have that right. So the spread right now is I got paid on this one from Lyra Finance. I got paid the $144. The cost of the option on Deerbit that I had to pay in order to get this option was 97 bucks. So the 500 and 500 basically negates itself because I lost 500 from Lyra and I gained 500 from Deerbit from the price movement of Bitcoin. However, I had to pay Deerbit $97 for that trade. And then I received $144 from Lyra. So my profit is $46. And the same would go with any position as long as you hedge it properly. So again, the strategy, what you would need to do is you would need to sell a covered call option. So in this case, selling at 1700 ETH, selling the call option, I get paid $42. And if I go on Deerbit and now I buy a call option, the cost is going, well, it varies. Put in a limit order. Obviously do it where it's profitable. You can see it's like 42 bucks. Sometimes it'll go to 41. Sometimes it'll go to 40. But ETH is extremely volatile right now. So I'm only going to make about $2 on this spread. But if you look for times when ETH and Bitcoin are not moving a bunch, and also if you do time frames that are way out, so let's say, for example, we do March 31st, it's going to offer different prices. So if we do March 31st, and let's just call it 1700 ETH, I'm going to get paid $117 in this position. And if I go on Deerbit and go on 1700 ETH and buy the call option, it's 89 bucks. So I'm paying $89 for this option. But if I go on Lyra Finance, I'm getting paid $117. So if you factor that in, I'm basically getting paid $27 in this position. And depending on the collateral that I put up, it can be profitable. So if, let's say, for example, I put on ETH. So let's say I put up 0.52 ETH. So basically the dollar value of my collateral is, I don't know, like 900 bucks. So if we do 27 divided by 900, the reason why we do that is because $27 divided by the $900, I'm getting paid 3% APR between now and March 31st. So about 2 weeks. So if you take that 3% APR for those 2 weeks, that's a 3% APR on 2 weeks, not a full year. You multiply that by 26 because there's going to be 26 2-week periods in a year. You're going to get around 78% APR per year with this hedging strategy. Of course, it varies as the prices vary, but theoretically you get a 78% yield on a delta neutral strategy. Are there any stable coins paying out 78%? Well, maybe not. The risk you take on, again, with these stablecoin is sure you may make that 7% now, but what if that stablecoin goes to zero? 7% on zero is nothing. Now if you're like, wow, that is too much junk. I don't want to mess with the arbitrage strategy and I don't want to take the delta neutral position. I just want to know what to buy, what to sell. I just want to copy trade someone. Well, there is a app for that. I'll leave a link in the description below so you can check it out. But here is the stat dashboard showing a couple of different wallet addresses and their trading history. Of course, you want to look for someone with a realized P&L that's good, and you want to copy trade them. So we're going to look for someone who at least has an unrealized profit and loss that's good, as well as a realized profit and loss that's good. For the most part, either the guys are wrecked or not even in a position. So here we go. This guy has a realized profit and loss of 2.46K. Not too shabby. And he's currently in an unrealized profit and loss of 754 bucks. What this means is that he's in the green right now and he just hasn't closed out his position. So let's go ahead and take a look at his wallet address on DBank. And once we open up DBank, we'll go ahead and see where he's at. As you can see here, this is his Lyra put option. He basically has the right to buy ETH at $1,400 on an expiration date of 3/24. So that's why this guy's in the green right now. He basically got a call option and he has the right to buy ETH at $1,400, and ETH is currently trading over $1,700. So he's in the green. So if you simply wanted to copy trade this guy, you can wait till he opens up another position by going under his history and seeing what he is trading, what he is doing, and copy trade him. Or you can look for another guy who is like, man, this guy was 200K profit and loss. Let's go ahead and see when he opens up a position, and just be patient and wait till he opens up another position. As you can see here right now, he does have a position on Lyra, but this is just in the liquidity pool. So he just deposited some collateral in there and he's earning a yield. If we check out his history to see what he is doing, we can see here that there isn't a bunch of history on him, so we'll go ahead and look for another wallet. And you can do this with each and every wallet if you want to figure out your own strategies. Let's go ahead and look at a losing wallet of something that we don't want to do. This guy probably has a put option and was kind of shorting the market and is getting completely wrecked and not ready to close it. He bought a put option, and let's go ahead and get his cost. So 132, 123, and we're going to divide that by 88 ETH. Basically, he has a put option, the right to sell ETH at $1,500. That's why the guy is getting completely wrecked. He also has another one at 4,800 or 48,000, I'm sorry, divided by 30. And at 1,600. So basically this option is going to expire in 3 days, and it's the right to sell ETH at $1,600. Maybe it will be a good trade if ETH gets nuked, but if ETH stays the same, it's going to be in the loss. So something to keep in mind. So basically, if you want to copy trade, look for some wallets you want to look for. You can go on DBank and simply you just take the strike divided by the underlying, and you can figure out what their prices are at and their expiration date. So let's say, for example, I did want to get a put option on ETH at $1,600. Well, I can simply just go over to Lyra Finance and say, all right, I need to go ahead and buy a put option at $1,600 with an expiration of March 17th. So I picked the expiration of March 17th. I bought a put option, and we're going to do $1,700. And it's basically going to cost me $43 in order to do this, depending on how many I want. If I want 10 contracts, it's going to cost me $440. So I get this option, and if I wanted to, I can simply hedge my position on Deerbit as well, or I can just copy the trade and pray for the best. Now, before we close this video, I want to show you guys some stats on Lyra Finance. The last video I made on Lyra was about a month ago, just talking about Lyra Finance and going over the details. And if you looked on their options TVL ranking, they were actually, I believe, 3 on the last video we made. They are now basically number 1. They keep flipping back and forth with Open, but mainly that's because the TVL on Open is made up with ETH. So as ETH goes up in price, their TVL goes up in price, and most of the collateral that is on Lyra is in the form of SUSD and some stable coins. So it's kind of hard to really measure that, especially when ETH goes up in price. So it's not really their TVL going down on Lyra Finance. So for me personally, Lyra's already flipped Open. Want to know why? Let me go ahead and show you guys some stats. This is compared to the other options protocol. You got Lyra, you got Open, you got Dopex, and you also got Deary protocol. As you can see here, Lyra has the hugest chunk of volume. Is hugest a word? I guess it is. Even if you look at weekly volume by protocol, it's dominating, like almost by 95. Well, actually, no, it's 98, almost 98% of the actual volume is happening on Lyra Finance. And here are some other Lyra Finance stats for Arbitrum. As you can see here, the volume and the fees for the protocol are constantly going up. This is just on Arbitrum. And Optimism is starting to get a uptick as well. Since the deployment to Arbitrum, most of the focus went over there, but now there is TVL coming back into Optimism and taking advantage of the different yields that are to be had with Lyra Finance, as well as since their Newport upgrade. The TLDR and the Newport upgrade is its lower fees, a better trading experience, and of course the UI UX, as always with Lyra Finance, in my opinion, is the best in the options space. And on top of that, there are other protocols that are powered using Lyra Finance. An example of them is Quinta. Quinta has its own options platform or its own UI UX with options, but it's basically just powered by Lyra Finance. So Quinta, you can kind of look at it as the exchange to go to, but really the underlying technology behind it is with Lyra Finance. So just something to keep in mind. Anyways, guys, thanks for tuning in. I hope you guys enjoyed this arbitrage strategy guide with Lyra Finance, as well as how you can copy trade other traders using Lyra Finance. Let's hit you guys with a wisdom one-liner in Proverbs chapter 10, verses 12. Hatred stirs up conflict, but love covers all wrongs. Be good, be righteous, love each other. Peace.